Do you know how much interest you are paying on your credit card debt each month? It is likely that you do not know. If you are like most people, and that is a major problem, because interest fees can quickly mount up and deplete your hard-earned cash. I will use one as an illustration. Assuming you have a $5,000 credit card balance with a 20% annual percentage rate APR. It will take you 94 months, nearly 8 years, to pay off your debt if you only make the required minimum payment of $100 per month. You will also accrue a staggering $4,311 in interest throughout that period, nearly equal to your starting balance. You can save hundreds or thousands of dollars in interest fees and pay off your debt faster by switching from a high-interest card to one with a low or no interest rate. Say, for illustration, that you move your $5,000 amount to a card with an 18-month 0% APR promotional period. You can pay off your debt completely before the promotional period expires if you make a monthly payment of $278. The best part is that there will be no interest charge. Zero, that's right, nada. Zilch. You successfully paid off your debt 6 years earlier and saved $4,311 for yourself. Amazing, isn't it? Indeed, it is. But before you join the balance transfer train, there are a few things you should be aware of. You must be aware of and steer clear of certain costs, rules, and risks. And in the remaining parts of this video, I'll talk about that. A balance transfer is when you relocate the financial debt you owe on one credit card to another credit card that has a lower rate of interest, generally for restricted time. This can help you save cash on rates of interest charges as well as repaying your financial debt quicker. Sounds fantastic. Some cards might also have a promotional or introductory duration of 0% APR or reduced interest rate on balance transfers, which can last from 6 to 18 months or longer. You also need to make sure that the card you want to transfer your balance to is not from the same issuer. Transfer of credit card balances issued by the same entity is not usually permitted. But before you go and apply for a balance transfer card, there are some things you need to understand. Some credit card issuers may have certain demands for your credit score, income, or debt-to-income ratio. Second, you are required to compare the terms and conditions of various balance transfer credit cards. Third, you need to examine if you qualify for a balance transfer deal. For example, you can't transfer a balance from one Chase card to another Chase card. So, is a balance transfer worth it? It depends upon your situation and also your goals. There are different kinds of balance transfer credit cards that are available depending upon your choices. A few of the usual kinds are balance transfer cards with lengthy 0% introduction APR periods. These cards allow a long period of time, generally 12 to 31 months, where you do not need to pay any type of interest on your transfer balance. This can assist you in conserving money as well as paying off your financial obligations much faster. Nonetheless, these cards might charge a balance transfer fee, which is typically 3% to 5% of the amount transferred. And also they might have higher regular interest rates after the introductory period lapses. Balance transfer card without balance transfer fee. These cards don't charge you for transferring your balance, which can save you money up front. However, these cards may have a much shorter 0% introductory APR duration, typically 6 to 18 months, and they may have high regular rates of interest after the introductory period completes. These cards give you rewards on your purchases, such as cash money back, points, or miles, which can increase the value of your card. Nevertheless, these cards may have greater balance transfer fees, shorter 0% intro APR periods, or greater regular rate of interest than various other balance transfer cards. Also, you may not make new purchases on your balance transfer card until you pay off your transfer balance, as they may not be eligible for the 0% introductory APR, and also could up your debt. Balance transfer cards for poorer credit scores. These cards are designed for people with a bad or lower credit rating, generally below 690. These cards may have lower credit lines, greater interest rates, and fewer advantages compared to other balance transfer cards. However, they can still aid you in conserving cash on interest payments and also enhance your credit score if you utilize them properly. The decision to hold a balance transfer card depends upon your situation and objectives. A balance transfer credit card would certainly be a good alternative for you if you have a high-interest credit card debt obligation that you can settle within the 0% intro APR period of the balance transfer credit card. You qualify for a balance transfer card with a low or no balance transfer charge and a high enough credit line to suit your financial debt. You can avoid making new purchases on your balance transfer card until you fully pay off the transferred balance. You can make at least the minimum month-to-month repayment promptly every month to stay clear of losing the 0% introductory APR and paying penalty fees. A balance transfer charge card would certainly not be an excellent alternative for you if you have low interest or no interest credit card debt that you can repay without transferring it. You do not qualify for a balance transfer card with a good credit limit or a positive offer proposal. You plan to make new purchases on your balance transfer card that will result in interest charges or raise your debt. You cannot manage to make the minimum month-to-month payment promptly monthly or repay your balance prior to the 0% intro APR ends. A balance transfer bank card can be a good tool to conserve money on interest charges and also discharge your financial obligation faster. However, it comes with risk and cost. You should consider the advantage and cost of a balance transfer credit card meticulously before obtaining one. You must also critically evaluate the various balance transfer bank cards available in order to determine the very best one for your needs. You can use a balance transfer calculator to assist in your evaluation of just how much you can save with a balance transfer credit card. You can look for these cards online, by phone, or by mail, depending upon the card and the provider. You will need to provide some personal details such as your name, address, date of birth, social security number, income, as well as expenditures. You will certainly also be required to specify how much financial debt you intend to move, as well as from which account. The issuer will check your credit rating to establish your eligibility and credit limit. You will certainly get your card, and also the balance transfer will certainly be processed within a couple of days or weeks if you qualify. You can evaluate the cards by checking out the list below aspects. The length of the 0% intro APR duration for balance transfers. This is for how long you can pay no interest charges on your transferred balance. The longer the duration, the more time you have to repay your debt without interest charges. Balance transfer fee. This is the amount you have to pay for transferring your balance, usually a percentage of the amount transferred. The lower the charge, the less you need to pay up front. Normal APR balance transfers. This is just how much rate of interest you will certainly pay on your moved balance after the 0% intro APR period finishes. The lower the rate, the less you will pay in rate of interest if you still have a balance after the introductory duration. Credit limit. This is just how much financial debt you can move to the card. The greater the limit, the more debt you can settle as well as transfer. Rewards and benefits. These are the benefits you get for utilizing the card, such as cash money back, points, miles, or other features. The more advantages and also incentives, the more value you can get from the card. You can use a balance transfer comparison device to aid your evaluation of various cards and find the best one to meet your needs. You can utilize the balance transfer comparison device by following these steps. Go into the amount of financial obligation you wish to transfer, and also your existing interest rate. Pick the card you want to compare from the checklist of options or enter the details of the card you want. By clicking Compare Cards, look at the outcomes. The device will indicate to you just how much you can save with each card, the length of time it will certainly take you to repay your debt, and also how much you will certainly pay in charges and also interest. You can also see the card's functions, such as the 0% introduction APR duration, balance transfer charges, regular APR, credit limit, as well as the incentives as well as advantages. You can adjust the debt, the current interest rate, or the month-to-month settlement to see how it influences your savings as well as your payoff time. You can arrange the cards using different criteria, such as financial savings, payoff time, balance transfer charge, or regular APR. If you enjoy this video, give it thumbs up and share it with your friends so that we can keep making them. For more videos like this, hit the subscribe button and remember to click on the notification bell so that you get notified when we post a new video. Thanks for watching.